Matron, take them away.
Welcome to the Learn to Trade with Black Bull Markets podcast. Today we are joined again by our friend Scruffy Trader, who is a mentor in the Forex space with a special emphasis on setting realistic expectations for aspiring traders. Welcome, Gary.
How do you do? Nice to see you again.
Good to see you again. Thank you. Excellent. Hey, look, so
I was going to say you're still looking fresh-faced. This is not good. You know, I mean, look at me. It's late at night here, and you've got me up in the middle of the night just to talk to you. So it must have been good last time.
You look very comfy. That's the main thing. No, fantastic. Yeah, excellent. Hey, look, just you wouldn't mind giving us a little intro again about sort of what you do and why traders should be paying attention?
Yeah, sure. If anybody hasn't seen me before, I'm a specialist in day trading. I've been around the market since, well, the mid-2000s. My trading career started then, not the way most people come into the industry where they've seen a flashy ad or something like that. Trading was actually part of my job as managing director of a mail order company. And through the years, it became my sole income. That was in 2017 when the company closed. And I split it between swing trading for passive income that pays for my car and sort of the house that I'm sitting in, and day trading, which is my daily income. I've done that now solidly since 2017 as a sole income. That's about it, really. For me, trading is a job. It's kind of a passion that you grow, but there's a difference between having a passion as a job and having a passion as a hobby. And I do it as a job, and it's how I get paid. So I guess that's it, really. It's quite a difficult one to say. How are you as a trader and all of that, and what do you do? I do the same thing every day. Up to the screen, do the same task, get paid what I need, and then off on my little adventures through the day, because that's the beauty of this job. We do what we like when we like. So that's me in a nutshell.
Fantastic. Understood. Yeah, love it. Perfect. So, hey, look, one of your favorite subjects when talking to new traders, from what I understand, is sort of what pain points they're likely to encounter. Would you mind sort of shedding some light on that?
Pain points is one of the things that I do talk. Just to put a little bit of context into that, I run a small group called the Scruffy Squad. And there's quite a few members there, and that came because they follow what I do. Now, primarily, I'm a trader before I'm a teacher. You know, I never call myself a teacher. I'm just a guy who does the job, and I'm happy to sort of share that experience. Now, when most people are new and they're talking to me, they're very excited about the chart. I want to be in. I've got to get here. Where's the money? All of this. And I'm like, whoa. Calm yourself down a second. First of all, you've got to put structure into this. I don't want to do structure. I just want the money. No. You need structure. So that becomes a pain point, because they have to get into the psyche of this is a job and it has to follow through as a job. So you've got to push through that pain barrier of doing the same tasks day in, day out. But then the pain comes into the reality of trading. Now, for me, there are a number of areas. Now, the first one is obviously the monetary value. You know, how much pain are you willing to take in order to earn X amount of money? And what that means is you've got to understand how much. See, I never say a risk. I think risk, and when people say risk reward, I think that implies gambling. So what I always tell them is, right, your pain threshold is how much you're willing to invest. How much will this trade cost? That's the first question you ask yourself before you go to market. And they go, well, I don't understand that. It's right. you should know roughly where you're getting in. So if you know roughly where you're getting in, you should also know roughly where you're getting out before you press the button. Now, that is either for a sort of a loss or you win, but you need to know where both of those parameters are. Now, if you concentrate on where the investment could possibly go bad, then anything else has to be good. So the first question is this, right? I know I'm getting in at X point and I'm getting out at X point. So you can calculate the distance between the two. Now, that could be anything. It could be 10 pips, 100 pips, whatever trade you happen to have on place. Know what your position size is, because there's a lot of them that try to do mathematical gymnastics, and that confuses them. So again, that's a pain point, because of, what size is my position? What size is my position? So I tell them to have a simple formula. It's $1 for every 1,000 of liquid money. That naturally controls your pain, your position size. So if you're 100 pips away and you've got sort of $1 on a pip, well, that's 100 quid or $100. Right. You know how much it cost. How much you're getting out on the other side? Well, 150. Good. You're getting more than you're going to lose. So straight away, that pain has become structured. But then I'll also talk them through managing the trade. Now, I'm a big believer, well, as you know, I come from a business background. We don't pay retail for anything. We want a wholesale discount. So if I'm going in, just for easy maths, it's $5 a pip and it's 100 pips against me. I don't want to pay 500 for that. I'll break the position up. So I'll go in $1 first and I'll build it backwards to a $5, because that way it'll reduce the exposure, but it'll naturally increase the upside as well. So if I've already agreed to pay the 500 at full position, well, if I'm wrong, I ain't paying 500. So I'm actually at peace with the market. I've removed the pain. You know, so that's one way of looking at it, just looking at how much you're willing to invest into the trade. The next part of the pain threshold is you. Because I think a lot of traders aren't actually mentally equipped to deal with the markets. Because if you're got a normal job, you work in a factory or sort of bus driver or whatever, and they're not used to high pressure, suddenly when monies comes into an equation, it changes your perception of what's going on. You know, you don't look at it as a job anymore. It's like, oh no, I can't afford to lose this money. I can't afford to lose this money. So you make rash decisions. So you've got to get through that pain barrier of understanding what greed is, but also understanding what the fear is, because the fear in the market is far powerful. You look at it, and how many times have you heard this story? You let a trade go so far out of control because you daresn't lose the money. But the second it goes into profit, you'll kill it. You won't kill the one that's going to hurt you, but you will kill the one that's going to give you the greatest pleasure. And these are points that I try to get across all the time. And it breaks the barrier. And it always comes down to the first question. Be at peace with the market before you press the button. And the only way you can do that is if you know how much that investment is to start with. Because a lot of, well, certainly a lot of new traders I've come across, they go, oh, the setup looks great. I love that. That's brilliant. Click. Right, where am I going to put my stop? Oh, no, this ain't good. Don't know. Oh, no, it's 50 pips away. Oh, I can't put a stop in now because I might lose a lot of money. Oh, no, it's 75 pips away. Oh, bang, count's gone. You hear the story all the time, don't you? Whereas if you already were at peace with the market, well, you would just let it ride. But you don't. You have to tinker with it because you're frightened of it. And these are the pain points that I try and sort of iron out, shall we say.
Yeah.
Does that make sense to you?
It totally does. No, I know exactly what you're talking about.
Yeah, I see it all the time, and I find it quite scary.
Yeah.
One of the worst ones that I see as well is when greed takes over and your trade is running really well. But if it's a day trade, you're looking at the waves of the market. Now, the ATR will tell you how far this is going to go. You know, it's very, very simple. And a very simple structure to work a wave out is take a daily ATR, divide it by 3. That'll give you sort of euro dollar for argument's sake. It has an ATR of roughly 90. Divide it by 3 gives you 30. You look at the wave structure, they're roughly about 30. Okay? Because it's just the way they are. It's just rough maths. But you're not going to get the bottom third. You're not going to get the top third, but you want the third in the middle. So divide that by 3 again. It gives you a minimum target of 10 pips. Right. If you know it's got a wave of 30, why on earth are you swinging for 60? So what you do is you see it go up, and you go, oh, I've got loads of money, Oh, no, it's coming down, what's coming down? Oh, I haven't got that much money. Oh, no, I've got no money. Oh, what's going on here? Whereas if you targeted appropriately in the first place by what the market is willing to give you, again, you wouldn't have gone through that emotional roller coaster. Again, relieving the pain.
Yeah, no, understood. Gary, I want to talk about copy trading if I can. Would you consider that to be a solution for a pain point when talking with mentees?
Define copy trading. Do you mean as in somebody copying my trade? Or
hypothetically, or just in general. Yeah, let's say yours or someone else.
Like a signal service, if you like.
Sure.
Categorically, no.
Okay.
I do not believe in signal services at all. I'll tell you for why.
Please do.
Teach you, well, one, what if I decide that I'm not going to work for the next 2 months? You're high and dry. But it also means you learn nothing. You don't learn a blind thing about trading. You're putting your eggs in one basket that's unknown. And if that basket disappears, but what I would say is if you are really interested in the trading market and you get an idea that one day you might like to go this, I would suggest sort of looking at a fund manager. He'll run a fund and he's about as good as it gets. You give him your money, I'll guarantee he'll give you more back. You know, so it's a different way. I wouldn't call that copy trading. That's more investing in somebody that is really good at what they do. But if you just blindly follow signals, there's a couple of elements to it. Like you say, one, what if the signal provider disappears? You don't learn anything. But also, what if you're on a different platform? Because broker to broker, the spreads might be different. The pricing structure from the feed might be different. But also, what if you were 5 minutes late to the party? Your entry mightn't be correct. So I find copy trading that way, or signal services, incredibly dangerous. Teach the man to fish. He's going to eat for a lifetime. Give the man a fish. It's only for the day. That's the best analogy I can give on that.
No, fantastic. Well said. Well, look, thank you very much, Gary. I, again, really appreciate your time and, take the time to out of your busy day to join us and staying up late as well. Thank you.
That's fine. No worries at all.
always a pleasure to talk with you. And listeners, again, thank you for tuning in. If you liked what you heard today, please make sure you subscribe and stay tuned. Thank you.
Excellent. See you again.
See you next time.